Before you refinance, stop. Because it's not always a great time to refinance. But in this video, we're going to talk about the times when it does make sense, and we're going to talk about the times when it doesn't make sense. Now, if the mortgage refinance process has you lost, trust me, you're not alone. A lot of people out there are having the same exact questions as you at the moment. Should I refinance because rates have moved down and try to lower my rate? Should I pull cash out of my home? Should I get rid of this adjustable rate mortgage and go into a fixed rate? These are all things that we're going to talk about as we consider the idea of whether or not you should refinance now or wait for a better opportunity in the future. For a lot of those people that are considering refinancing at the moment, the answer isn't necessarily black or white. There's a lot of gray area in the middle, and that's where a lot of people fall. So what things should you be considering right now when considering to refinance? On top of when should you actually wait? And not refinance now, but wait for something to change in the future. Well, that's what we're gonna dive into right now after you hit that thumbs up if you find any value in my videos at all. And also subscribe to the channel to stay updated on everything mortgage and real estate related. When it comes to refinancing, people are typically trying to do one of two things. They're trying to either lower their interest rate, which in turn allows them to lower their monthly payment, or they're typically trying to pull cash out of the property and use that cash to either pay off debt, do home improvement, or something else that they feel will benefit them. But before you get too deep into that rabbit's hole, there are some questions that I want to ask you before we talk about the times when it does make sense to refinance. And the very first question I want to ask is, how long do you plan on being in the property? Because this in many ways will dictate whether or not it actually makes sense if all of the other factors make sense. Now we'll come back to that question in a moment. Now, the next thing I want you to consider, if you're one of those people out there that has mortgage insurance and you're thinking, hey, I want to refinance my mortgage because interest rates have come down. I want to get rid of this pesky mortgage insurance that I pay every single month. What I want you to do is find out what your current interest rate is and what your mortgage insurance rate is every single month. Because I hear a lot of people talking about refinancing to get rid of their mortgage insurance, but they don't truly understand what their effective interest rate is, if you will. They don't understand that if you take your current interest rate, say it's 6%, and you have an FHA loan where the mortgage insurance is 0.55%, if you add those together, you essentially have an interest rate of 6.55% per month. And that might actually be a bad example, because if you had that effective rate, it might actually make sense to refinance today. But more of what I hear is somebody that has a 3.25% FHA rate, and at the time they got their FHA loan, the mortgage insurance was 0.85%. So when you add those together, they essentially have an effective rate of 4.125%, which is much lower than today's rates. And as we're going to talk about in today's video, it's probably not going to make sense to refinance and get rid of that mortgage insurance just because of where interest rates are today on that loan. But these are things that I want you to consider before you dive too deep into the process. On top of that, I want you to think about what you're going to do with that cash if you're planning on pulling it out of the property. Because in many instances, what you do with that cash can be a big part of whether or not it actually makes sense to refinance. And the last thing I want you to consider is, how much is it costing you to do this refinance? And we're going to talk about that in a little bit more detail as we dive into today's video. But I often get the question of people asking me, Jeb, should I refinance my mortgage? And the reality is, for most people out there, the answer is probably going to be no, because we had interest rates so low for such a long period of time. A lot of homeowners out there, in fact, 90% of homeowners are currently sitting on interest rates below 6%. And because there's a lot of headlines at the moment that interest rates have pulled back, a lot of home buyers out there are thinking, well, maybe now is the time to take advantage of a lower monthly payment. In fact, there were a lot of people pushing this whole marry the property and date the rate for the better part of a year and a half as interest rates moved up, with the idea that, hey, as interest rates come down, you're going to be able to refinance to a lower monthly payment. But unfortunately, what we saw is interest rates really didn't come down for the better part of 2023. We've just started to see them pull back at the end of the year as we headed into 2024. But even since then, we've seen interest rates bounce all over the place because there's still a lot of volatility in the market. And while I do expect interest rates to continue to move lower, there are definitely things that you have to consider when deciding on whether or not it makes sense. Now, my lender that I use all the time and I refer a lot of business to has an easy calculation that he uses to help people determine whether or not it actually makes sense if they're just trying to refinance and lower their mortgage rates. And that calculation is, you take $125,000 and you divide it into your loan amount. So say, for example, you have a loan amount of $125,000. Well, you take 125, you divide it into 125, that's 1. That means you need to save 1% on your interest rate in order for that refinance to make sense. But here's the thing, even if you can lower it 1%, it still might not make sense because you also have to consider the costs. One of those things that we talked about in a moment, how much is it actually costing you to do that? If you're paying 2 or 3 points to buy down that rate so that you save 1%, then it's probably not going to make sense to do it. But using that same calculation, say you had a loan amount of $250,000, divide 125 into 250, that means you need to save 0.5% on your interest rate. And we can keep using that calculation with higher loan amounts. If you have a $500,000 loan amount, that means you need to save 0.25%. And as you can see, the higher the loan amount, the less you need to save on that interest rate in order for it to make sense. But in the case that you have $1 million loan amount, you take 125, you divide it into $1 million, that means you need to save 0.125% on the interest rate. Now, many of you guys know I purchased a new home about 2 months ago, and at the time I got an interest rate of 7%. Well, after about a month of owning that property, my lender actually reached out to me and said, "Hey, Jeb, I can save you 0.5% on your interest rate if you decide to refinance now." So I was able to take my interest rate from 7% down to 6% with absolutely no closing costs, and it's saving me over $350 a month. Now, a lot of people ask the question of, how are you able to refinance and not pay any closing costs? Well, there's something you need to understand when getting a mortgage, is that lenders can be paid in a couple of different ways. One way is that you pay points. You pay fees up front to that lender, and in that case, they're typically giving you the best interest rate out there in the market. And then other times, you might be able to take a slightly higher interest rate, and in that case, the bank actually pays the lender on the backside. It's called yield spread premium, or YSP. And in that case, the lender can offer me a slightly higher rate than the best interest rate in the market, and not only do they benefit from getting paid by the lender, but sometimes there's an excess credit that can be forwarded along to the borrower. And in the case of my mortgage, I had a credit of just over $5,500, which in the case of my mortgage, there was enough credit there to pay the fees that the lender was charging me, on top of the title and escrow fees that needed to be paid by refinancing my mortgage. Now, understand that's not always going to be the case. In fact, I probably could have taken a slightly lower rate, maybe 6 3/8, but it would have cost me money out of my pocket in order to take advantage of it. And because I believe that interest rates are going to continue to trend down over time, I didn't want to pay money out of my pocket, because in that case, it's a sunk cost. And I'm trying to avoid any sunk costs, especially because I do believe I'm going to have additional opportunities in the future to refinance and lower my mortgage payment. So the question is, when does it make sense to refinance, and when should you wait? When should you not refinance? I want to start by talking about the times when it does make sense to refinance, and that is when you can actually lower your interest rate. Exactly like I did. We can use that calculation that I gave you earlier, 125 into your loan amount, and that can tell you how much you need to save in order for it to make sense. And by lowering your interest rate, in turn, you're also going to be lowering your monthly mortgage payment. But lowering your interest rate isn't the only time it makes sense. Another time it might make sense to refinance is when you're trying to access that equity in your property. Say you don't have the money in your checking or savings account, or maybe you do, and you just don't want to use it for whatever reason, but rather you have a lot of equity just sitting in your property, not being able to be put to work. So you want to access that equity. Maybe you're using it to pay down debt, maybe you're using it to buy another property, or maybe you're just pulling it out to have emergency funds in your account in case something happens in the future. While all of those are opportunities to refinance and reasons that you might consider it, but the things we discussed earlier are the things you need to take into account when thinking about pulling out that cash. How long are you going to be in the property? How much is it costing you to refinance? In the case that you're using that money to pay off debt, how much money are you saving per month by paying off that debt? Maybe your mortgage payment is actually going up because you're pulling cash out of that property. You're taking a higher rate than what you previously had, but in turn, you're able to pay off a lot of debt on this other side. So overall, you're saving money by consolidating that debt, by getting rid of that debt. These are things that you have to consider. Now, something to consider is all debt being paid off is not equal because of the interest rate on that debt. Some things have higher rates than others, while others are being amortized on different time frames. So you need to take all of that into account when considering whether or not you should refinance. Don't just look at, hey, I'm saving this amount of money per month by doing this. You need to factor in not only how much you're saving, but the time frames on some of that other debt that you're paying off, because now you're amortizing that money you pulled off over a 30-year period versus in some cases when you're paying off a car loan, that car loan was only 5 or 6 years. And another case when it might make sense is when you're trying to consolidate two loans. But even then, you need to consider the balance on your first mortgage versus the balance on your second mortgage. And what is the effective interest rate between those two once you consider both sides? Because if you have the large majority of your debt sitting on a 2.5% interest rate, and you only have a smaller piece of debt, if you will, at a 7-8% interest rate, then refinancing and combining them with today's rates probably doesn't make sense. And one of the last times it makes sense to refinance is if you're trying to get out of, say, an adjustable rate mortgage and go into a fixed rate mortgage. Maybe you're worried about your interest rate adjusting, or maybe you've owned your current loan for, say, 4.5 years and it starts adjusting at the 5th year. Well, depending on where that rate can adjust to, it might actually make sense to refinance and combine those mortgages together. But here's the thing, all of the things that I just mentioned doesn't mean it's a hard yes on refinancing. There are always things that you have to consider, like the time frame. The time frame is important because if you pay cost to refinance this mortgage and you only plan on being in the property for a short period of time, then in many cases it might not make sense. Let's say, for example, it costs you $5,000 to refinance because you're having to pay closing costs and do different things, and it's saving you $200 per month. But you know that you're going to be moving out of the property in 2 years. Well, you know over the course of 2 years you're going to save roughly $2,400 because that's $200 per month. But it costs you $5,000 to refinance. So in that case, you're actually upside down on what it costs you to do that, and it probably doesn't make sense to refinance. But because there's so much volatility in the market and because the mortgage industry is slow, there's a lot of people out there pushing people, homeowners that have super low rates, telling them, you should still refinance. And that's just wrong, right? For many, many reasons. And that's why it's very, very important that you work with a mortgage professional, someone that can answer these questions for you, help guide you through the process, and not only tell you it is a good time to refinance, but someone that's also willing to tell you, hey, it doesn't make sense right now. You should wait because of X, Y, and Z. Now, as I said earlier, it could very well make sense, but because of where rates are, there's a really good chance that it might not make sense. So just make sure when you're going through that process, just make sure you're going with someone that you can trust through the process, someone that understands it, can guide you, can answer all of your questions. Now, if you don't have that person, I'm putting a link in the description below of somebody that I know, like, and trust that can take good care of you and guide you through that process. There's no fee. Get a second opinion if you're already going through the process, just to make sure you're getting a good deal. Now, earlier in the video, I asked, how much is it costing you to refinance? And you might say, well, how do I know? Well, it's usually really simple to figure this out, and that is by looking at Box A on the loan estimate. Box A explains all of the fees that your lender is charging you to do that loan. Now, in many cases, you'll have a lender saying, I'm not charging any fees. This is a no-point refinance. There's no cost involved for me. But yet you look on Box A and there's fees being charged. If that's the case, they're charging you fees because otherwise there would be nothing reporting in Box A. But here's one thing you need to consider when refinancing, because it's different than when purchasing a home. When you're purchasing a home, you're not really in control of the title and escrow on that property because it's being picked by the seller in many cases. But on a refinance, oftentimes the title and escrow is being picked by the lender. These fees should be pretty close across the board depending on the area that you're located in. But here's the thing. Some lenders out there negotiate the best rate and fees from title and escrow, which in turn you can have two lenders giving you the same exact rate, not charging any fees, but one is actually lower than the other because they went and negotiated some of these other fees that you're getting charged through the loan. And what I will say is a lot of your big box lenders, the ones that you search for online, aren't doing that because they own the title and escrow companies, right? They're making additional fees on that side. So they're not charging you here, but they're charging you here. So just be aware when you're going through that process. Get comparisons. It never hurts you to compare two people side by side just to make sure you're getting the best deal. Now, what I will say is the best interest rate isn't necessarily the best deal. One lender can be charging you points for that rate, whereas the other lender isn't charging you any points, but they're giving you a slightly higher rate. So you have to decide which lender is the best for you and which is actually being upfront with you and giving you honest information. But one thing I do want to add to that is if you are refinancing your mortgage, try to go back into the same term if you can from what you had before. Say, for example, you started with a 30-year fixed, you've been in that loan for 5 years, for example. You never refinanced back in the day. You want to refinance now. You have 25 years on your loan. Well, in the case that you can refinance, try to go back into a 25-year term because that way everything stays on track and you still pay off your loan in the same amount of time. It's really easy to make it appear like you're saving money when you always go back into a 30-year term. And the other thing I'll add on top of that is try not to add your closing costs on top of your loan balance. Try to find a lender that can give you a credit towards those closing costs so that you're not adding them onto the loan and or come out of pocket with that money. That way you're not building up your loan balance every single time you're refinancing, because in turn, you're affecting the amount you're saving by doing that. And one other thing I'll add is when you're going through the refinance process, unless you have an FHA or a VA loan, if you're on a conventional loan, you're going to have to qualify for that loan again, which means you still have to have credit probably comparable to what you had before. You're going to have employment. You're going to have income. You're going to have to still provide all of that documentation, get an appraisal, all of those things that you did the first time to get that home. You're going to have to do it again when you go through the refinance. Now, FHA and VA are a little bit different because they have a streamlined process that allows you to refinance without all of this documentation. So that's what you need to consider if you're thinking of refinancing. But earlier in the video, I said there's also times when you should wait and not refinance, maybe wait for a better opportunity. And one of the first ones I want to talk about today is when it has to do with closing costs. If the lender is having to charge you a bunch of points, they're charging you a bunch of fees in order to actually save you any money on the interest rate, and you've got some extended period of time on your loan in order to recoup that cost, it probably doesn't make sense. Now, the lender is going to make sure that there's a tangible net benefit, which means there's a benefit to you by actually refinancing. But in many ways, it can appear as if it's a good deal because you're lowering your rate, but in turn, you're being charged all of these fees to do it. And what I will say is because interest rates are likely going to continue to trend down for the next couple of years, there's no reason that you should be paying a lot of fees to take advantage of a lower rate, because chances are you're going to be able to do it again in the future, and you don't want all of these sunk costs when you're going through that process. Now, the next time it might not make sense is if the interest rate savings isn't that big of a deal. Now, earlier I said you can take 125 into your loan amount, and that'll tell you how much you need to save. But even when that calculation works out and it says that it makes sense, you might just wait, because if interest rates are trending lower, then there could be an opportunity to save more money in the future. Use the example that we had earlier where you only need to save 1/8% if you have a loan amount of $1 million. Well, let's say your interest rate was 7%. Well, that would give you a mortgage payment of $66.53. But let's say interest rates dropped to 6.875%. But our calculation we used earlier is 125 into $1 million means we only need to save 1/8%. Well, 6.875 would be 1/8%. But in the case that we decided to move forward with that, our mortgage payment would drop to $6,569, which is really only an $83 savings per month. Now, for a lot of people, $83 might be a lot of money. But if you're currently sitting on $1 million loan amount, $83 probably isn't much at all. And in the case of that, I would probably just wait and see if rates improved any more before moving forward with that rate. Now, if you wait, there's a chance that rates go up, but going through the process of gathering all the paperwork and all of that to the lender, to go through the process, signing loan docs, all of that stuff to save $83 a month probably isn't worth it to most people out there. Another time it might not make sense is if your financial position has changed, if your credit has changed, if you've gone through something since the last time you bought that home, you've accumulated more debt, you've been laid off your job, something has changed. Well, in that case, you probably should just wait and get everything back together before moving forward, even if you can do it. If your credit scores drop considerably and you can still refinance, I would say pause. Work on your credit, improve your credit score, try to get your credit as high as possible, and then go back and try to refinance, because your credit affects your interest rate and your monthly payment more than anything else. So the higher you get that credit score, the better off you're going to be long term. So just because you can refinance doesn't mean you should refinance. And that goes into having a shorter term time horizon. If you're planning on selling your house or getting rid of your house within a couple of years, I would say don't refinance. It's probably not worth it unless you can save a significant amount of money, because oftentimes the cost to refinance is going to outweigh that benefit, making it not really beneficial at the end of the day. But here's what I'll say. When you're working with a professional, they're going to guide you. They're going to answer your questions. They're going to help you understand. They're not always going to be a yes man or a yes ma'am, if you will. They're going to say, hey, you should wait. You should work on this before refinancing. Or if you do this, understand that it might not actually make sense to move forward. One last thing I want to add when talking about refinancing is, even though I believe interest rates are going to continue to move lower, I think it would be very, very optimistic to think that rates are going to get back into the 3s or even the low 4% range at any point in the near future. So take advantage of opportunities as they present themselves, which means if you're given an opportunity to refinance because everything makes sense, you're able to lower your monthly payment, the cost makes sense, then I would take advantage of it at that time versus waiting thinking that rates are going to go lower in the future, because at some point they might bounce and they might go back up again. So take the little opportunities as they present themselves, again, as long as it makes sense, and just keep doing it as much as you can until you get a rate that you're comfortable with or until rates stop going down. Now, one of the questions I get all the time is, how soon can I refinance after buying my house, or how soon can I refinance after refinancing? And I would say the typical answer for most people is about 6 months. And that's because depending on how your lender got paid through the process, if you refinance sooner than that period of time, many times the lender requires them to pay back any money that they made on that loan. Now, I was fortunate enough to work with a company that didn't have that policy. Therefore, I was able to refinance a month after my original loan, but most companies don't work that way. So just make sure you have that conversation with the lender that originally did your loan. If you're thinking of refinancing, go back to the original lender, ask them their policy on that, and if rates have moved enough where it makes sense, then I'm sure they can come up with something to help you with the process. Now, in this video, we really talked about pros and cons of refinancing, and we didn't really dive into Mortgage Refinance 101. What are the basics? What does it all mean? Well, if you're interested in that and want to know more, do me a favor and check out this video here.